Hi, in today's class I am going to explain another problem of income from house property. Srivastava owns four houses, the details of which are as follows. So here there are four houses, the municipal value and monthly rent. First house no monthly rent, second house also no monthly rent, third house 600 rupees and fourth house 800 rupees. And next is a municipal taxes 500, 300, 600 and 400. Next purpose. First house self-residence, second house is also self-residence, third house is a let out to residence and fourth house is a let out business. So first house and second house is used for residential purpose. So these two are considered as a self-occupied property, and third house is used for let out property. This here clearly specified let out property, and fourth house is also let out property. Whether the tenant may be used it for other purpose, that is not required here. Why the SSC used or owner used? The owner used it for let out purpose, both third as well as fourth house. Interest on loan taken for the construction is given for three houses, no interest on loan for fourth house. Ground rent, which is not the part of our calculation. Insurance premium is also not part of our calculation. Next is a vacancy period. First house, second house, no vacancy. And third house is a 1 month vacancy, whereas in fourth house, 2 months vacancy period. So here, while you are calculating rent received or receivable, you have to consider the vacancy period of the third house as well as the fourth house. Next, collection charges of third house and fourth house, which is also not necessary for our calculation. So we have to calculate always on the basis of provisions related to the income from house property. Whatever the informations required for the as per the provision, that only we have to consider, not the other informations. Next point, third house was completed in the month of May during the previous year. So in case of third house, the construction completed in the month of May in the previous year. So house can be utilized or can be used only after completion of the construction. So SSC gets the income only after completion of the construction. So in the month of May, construction was completed. So we have to consider or we have to calculate the income from June onwards only. Before that, SSC not used it because the construction was not completed. Construction completed in the month of May only. So from June onwards, SSC used it. So third house is a let out. So we have to consider that it was let out from June onwards because it was construction was completed in the month of June only. Sorry, in the month of May. So SSC used it from June onwards. In respect of fourth house, the tenant agreed to bear the cost of repairs. So that is not required. Even if the SSC tenant bared any expenses, that is not to be considered for our calculation, because here we are calculating the income for the owner or income for the SSC, not from a tenant's point of view. So therefore that is not required. So compute the income from house property. Let us calculate one by one. So here in this problem there are four houses. The first house self-occupied, second house is a self-occupied property, third house is a let-out property and fourth house is a let-out property. So before starting any calculation, first we have to divide whether the house property is a let out property or self-occupied property. So in this problem, first house and second house are self-occupied and third and fourth are let out property. So let me solve the income of the first house. The first house is a self-occupied property. It's used for residential purpose. So therefore we have considered it as a self-occupied property. Net annual value is nil. This is a format for the calculation of self-occupied property. So it starts from net annual value. The net annual value is always nil for a self-occupied property. It is fixed and less deduction under section 24. Only one deduction for self-occupied property, that is a interest on loan. If it is given directly, you can enter it directly. So here interest on loan taken for construction 2500, which is given directly. Interest on loan itself is specified 2500. If the loan amount borrowed is given, then you have to calculate 1/5 of a pre-construction period interest as well as interest on loan in previous year. In this problem, the loan borrowed for the construction of the house is not given. So directly interest on loan is given, so that you have to enter. So that's a 2500. So in case of first house, there is a loss because it is used for residential purpose. Of course, there will not be any income. So loss from house property is a 2500. So that's about how to calculate or how to assess the self-occupied property. It begins with the net annual value. Only deductions comes under self-occupied properties, and that is only interest on loan. Now we will solve the income of second house property. The second house is again self-occupied property. The purpose is a self-residence. So again net annual value is a nil, and a deduction under section 24 interest on loan, which is given directly 1800, and PCP interest and interest on loan in previous year not applicable, because this applicable whenever the loan amount is given, or whenever the loan is borrowed for the construction of the house or for the purchase of the house property. If it is given, then only it is applicable, otherwise it is not applicable. So here also the loss from house property is 1800. In case of self-occupied property, SSC won't get any income because there will not be any income. It's used for residential purpose, so therefore there will not be any income in case of self-occupied property. So that is how to assess second house property, self-occupied property. Let me solve the third house. Third house is a let out property. One point you have to note down, or which I have already explained. The third house was completed in the month of May during the previous year, and therefore the house was used from June onwards. The owner or SSC can utilize it from the month of June onwards. So therefore we have to calculate the income from June to March of the previous year, because he used it from June onwards. In the month of May only the construction completed. After completion of the construction, only house can be utilized for different purposes. So here it is let out property, used as a let out. The purpose has been given. It's a let out property. Okay. We will calculate as per the format of let out property. Annual municipal value, it's given 5500 municipal value. Next fair rental value, which is not applicable. Standard rental value is also not, because it's not given, so therefore it's not applicable. No fair rental value, no standard rental value, both the values are not given. The next stage is the expected rental value, which we have to calculate. Since here no fair rent and no standard rent, municipal value itself is the expected rental value. Both are not applicable. Fair rent and standard rents are not given, so therefore municipal value itself is the expected rental value. Next is a rent received. So rent received is on the basis of rent. The monthly rent 600 rupees. The monthly rent of the house property is 600 rupees, and it was let out from June onwards. June to March, the total months comes 10 months. It was actually let out for 10 months. 10 months it was let out or used in the previous year, June to March. But in that, 1 month is a vacancy period. Vacancy period of the third house is a 1 month. 1 month it was unoccupied. So therefore that term is considered as a vacancy period. The total rent received is for 9 months. So 600 into 9 months. So 5400. Again, monthly rent 600 rupees, which is given in the problem 600, and it was used from June onwards, June to March. SSC used the house from June onwards. Before that, house construction was not completed. The total June to March total months 10 months, but out of 10 months SSC let out it only for 9 months because 1 month is a vacancy period. So 10 minus 1, so 9 months. So 9 months only house was let out in the previous year. So therefore the rent received or receivable in the previous year is a 5,400. So no unrealized rent, it's not given. So unrealized rent is not there in this house. Next is a gross annual value. The gross annual value is the second provision. If there is a vacancy period, then gross annual value is equal to rent received. Whenever there is a vacancy period or unrealized rent, then gross annual value is equal to rent received. So rent received is a 5,400. That itself is the gross annual value. No comparison with the expected rental value. Next is a municipal tax. Municipal tax is a 600 rupees. It's given in the problem. Municipal tax is paid, just paid as 600 rupees. So 600 is a municipal tax. So after deducting municipal tax, the net annual value rupees 4,800. Next comes deduction under section 24. Two deductions for a let out property. First one is a standard deduction, which is to be calculated on a net annual value. Net annual value into 30%. Net annual value is a 4,800 into 30%. 30% on net annual value. Net annual value 4,800 into 30%. So 1,140 is the standard deduction. Next, interest on loan. Here loan borrowed for the construction of the house or purchase of the house is not given. Directly interest on loan amount is given. That is a 3,000. Interest on loan is a 3,000. So 3,000 is the interest on loan. The PCP interest as well as interest on loan in previous year not applicable because there is no loan amount. So directly interest on loan is given. So 3,000. So the balance 360 is a income from house property. So income from house property is a 360 rupees. So that is the income of a third house. Let me explain the solution for the fourth house. The fourth house again let out property which is specified in the problem, let out business or let out property. We will calculate as per the format of let out property. Municipal value 5,000 which is given in the problem. Fair rent and standard rent both are not applicable because both are not given. So therefore expected rental value is a 5,000. Municipal value itself is the expected rental value. Next is the rent received or receivable. Now the monthly rent was rupees 800, means 4,000 was let out at rupees 800 per month, 1 point. And another point, there is a vacancy period 2 months. So it means it was let out only for 10 months out of 12 months in the previous year. So it was vacancy, there was a vacancy for 2 months. So total let out duration is a 10 months. So total 10 months it was let out. So 800 is a monthly rent into 10 months. Let out duration is a 10 months. So total rent received is a 8,800 into 10. Next, unrealized rent not applicable. So after considering unrealized rent and vacancy period, the actual rent received is a 8,000 for the previous year. Next is a gross annual value. Whenever there is a vacancy period, gross annual value is equal to rent received. So 8,000 is a gross annual value since there is a vacancy period. If there is a vacancy period, rent received itself is a gross annual value. Next, municipal tax paid, it's a 400 rupees. Municipal tax is paid. And next, net annual value 7,600 after deducting municipal tax from gross annual value. 8,000 minus 400, so 7,600. Next, deduction under section 24. The standard deduction 7,600 into 30%. Net annual value into 30%. It is 2,280. Interest on loan not applicable here. No interest on loan. It is nil. Either loan amount is not given or interest on loan amount, both are not given. No information related to interest on loan or related to loan. So therefore interest on loan is considered as a nil. So total income from house property in case of fourth house is 5,320. So net annual value minus this standard deduction, the balance amount is 5,320 is income of fourth house. So this is a solution for the fourth house. This is the grand total of four houses. The first house self-occupied is a loss of 2,500. Second house is a self-occupied, there is a loss of 1,800. Third house is a lettered property, there is income of 360. And whereas fourth house is also lettered property, and there the income rupees 5,320. The total income of the four houses is 660, is the income for the SSC in the previous year. The total income from house property is 660. Thank you very much.